Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 23rd of July, 2026, and the economic data is flying. Markets are on the move ahead of today's US Open, and in today's video, I'll break down everything that you need to know for your trading day. Let's get right into it. On balance, I would say the ongoing conflict in the Middle East remains the dominant story. It's broadened to the Red Sea as we discussed yesterday, and that is weighing on markets along with the just reported earnings from Alphabet or Google. That stock is trading down 5% ahead of the US Open on concerns about its rising spending on AI capex. Just to recap major market moves ahead of the US Open, oil is spiking 5%. That's the biggest story to keep an eye on right now. That is weighing on US indices, which are falling a little bit less than 1%. The US dollar is rising in a safe haven bid, and gold is falling. For US data, we've just had the release of initial jobless claims, which honestly are holding in there far better than perhaps anyone expected. They printed a historically low reading last week at 187,000 net new unemployed Americans. That's much better than the 211,000 that was expected and drags the 4-week moving average down to 208,000. So the labor market, at least in the US, remains strong. In terms of macroeconomic data, though, the biggest development is the European Central Bank, which left interest rates unchanged. This was not a surprise, but I'll talk about why I think it may be a mistake momentarily. The ECB said that the full inflationary impact of the energy shock is still to come, and traders are already pricing in a high likelihood that the ECB will raise interest rates again in September. This is kind of what central banks do. They're loath to make very aggressive, repeated moves unless it's absolutely necessary. But as we'll see in today's chart of the day, there is a clear divergence here. So what I've plotted is a 4-hour chart of the euro dollar with the candlesticks, and I've overlaid the 2-year yield spread between German and US bond yields. Germany, of course, the Eurozone's most important economy, and you can see that clear divergence here where bond market traders are driving German yields higher. In fact, the German 10-year yield, not shown on this chart, is at about a 15-year high as traders price in concerns about the energy shock and elevated inflation. Meanwhile, the euro is falling, perhaps signaling concern about a possible policy mistake from the ECB. Euro dollar, for its part, is dropping very sharply as I come to you right now, and the key support level to watch is in the mid 113s. That's near the low that we set in late June. That's a longer term 38.2% Fibonacci retracement, and that level could come in play either today or tomorrow ahead of the weekend given this strong bearish momentum. We'll see if ECB President Lagarde is able to assuage some of these concerns, but for now, euro traders are selling first and asking questions later. Certainly one to keep an eye on in the world's most widely traded currency pair. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you enjoyed this video, be sure to subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.